reduction law, which is around the education and educational technology. Yeah, this is really concerning. And I think, as mentioned from James around the sort of the regulations blizzard, this blindsided a lot of companies, certainly in market. Now, maybe some of the big companies, VIP Kid, might have seen this coming. But to put this in perspective, that sector is it's not regulated at all, and 98 or 100% of children at school have after school learning, whether it be vocational, but it's mainly academic. So that sector is completely non-regulated, and it's been a massive boom for a very long time. Now that happens, and then it draws the eyes of the government. So one thing I would say, and James kind of really picked up on this, is the pressures on children and the pressures on families. So 100% of children have after school education. The pressure that's causing for the essentially one child families. There is no desire to have a second child when that is the environment that you're bringing up your children. So that's been noticed, and it had to be addressed. So I think we've seen that the aging population, the lack of the birth rate is continuously dropping. I think last year it was 10 million people. Okay, it sounds enormous, but that's not a lot for a population of 1.3 billion. And again, when we talk about the imbalance of the aging population. So I think for me, it was certainly looking at the aging issue, the lack of regulation, but also, and I think Shirley touched upon this in the stock market, they don't want their stocks in America. They want to bring them onshore. They want to bring them back. $1 trillion or something was knocked off the market on that day. VIP Kid, which went to do his IPO, not happening. I think, China has made a very, very clear statement. They want their companies listed in China, in Hong Kong or in China, not in America anymore. And I think that, for me, that's relatively clear. What that means for the sector, I don't know. It's still very too early to tell. But I mean, the UK education specifically is a major sector here in China, and we're extremely concerned by that, by the lack of communication about this, but also just the implications of what it might mean to the market. So interesting times to be in the education sector. I'm not sure if someone would say interesting, they might use a different adjective, but
China only restricts a curriculum-based K-12 education sector. So it's very clearly defined. If you are not, if you are a quality sort of skill set training in education outside of curriculums, math, English, etc., you are all good in China. And also, if you are moving down into the pre-K education, childcare, or if you are going to college level education, those are unbridled. So there are still a lot of, every time when you squeeze an opportunity, you open up a lot of other opportunities as well. It's worth exploring. But the other thing I really want to talk about, which applies to all sectors, is that when this education restriction policy was announced, it was actually nothing new to people who actually knew it, because at China Big Idea, we covered it in May. So this really is important to understand about China. China is huge. And so if you look at the past 40 plus years, China's style has always been to test pilot something before it's launched nationwide. So back in May, it was very clear the government was saying in Beijing and Shanghai, this was being carried out, and you know what's coming. And people in the industry knew exactly what was coming. But to the world, it's perhaps a big shock. But if you watch China carefully, particularly if you're doing business with China, it's worthwhile that you have somebody who really understands China. One, you read between the lines of policy documents. We spent hours and hours reading. You read what the government is concerned about, and possibly that's what's going to be addressed. And secondly, you watch the pilots. They usually pilot real estate control policies. They pilot it in a couple of cities first.
The Belt and Road moving outbound, but also internally. I mean, Shirley touched upon the dual circulation system. That's also a massive opportunities for businesses as well, specifically in retail. So again, there is huge opportunities within China. Again, we're looking at the financial services. Difficult, but again, when we're talking about China, the financial service sector in China is 40 trillion. So foreign investment is around 2% of that, but the crumbs at the table are still huge opportunities around that market. And again, if I'm talking about sustainability, energy transitions, That is a massive sector that China, as we mentioned, is investing in. That's a massive opportunity for UK businesses here within China as well.
Yeah, so all these questions are actually structurally connected. It's rather interesting if you look at what the Wall Street bankers are doing. John Thornton is currently, I believe, in China, organizing the third year in a row of that US-China financial roundtable. So essentially all the big Wall Street bankers are in China, bypassing Washington, DC. They don't really care about politics. They're going to China because they're looking at this super lucrative financial market in China onshore that are possibly going to be the biggest in the world within a couple of decades. And so China's foreign investments in the wealth management sector is looking to double by 2025. And the speed of growth is just going to be ginormous. If you look at just simply the demographics of the aging population and all the enormous need for pension reforms and management. And so if you look at BlackRock became the first wealth management fund from the United States that have set up a wholly owned subsidiary in Shanghai. And George Soros actually has been written quite a lot actually at the FT, attacking BlackRock. And look at what the BlackRock Larry Fink said. Larry said, well, we are protecting and we're maximizing our shareholders' interests. So essentially, you have to really look at structurally what China's next phase of economic development really needs. China really needs to materialize, I should say, build more sophistication, depth, and width to its financial markets. This has become imminent on the horizon. So what China is doing recently is very interesting. So if you look at China trying to bring all the overseas listed companies back on shore, simultaneously is trying to set up a Beijing stock exchange. And so if you connect it together, China's number of unicorns is almost at the same level with the US number of unicorns. And unicorns really gives you a very good indicator about the vitality of the economy. And so with about 300 or so Chinese unicorns at about $1 billion market cap before even listed, China is not going to, in no way, China would allow these companies to be listed in the US again. So, but China has to create the proper setup in order for these companies to be listed on shore in its home markets. And how China can do that, China must attract global capital into China and finance these unicorns in China. So this is actually, that goes to the end point of what China is trying to deliver now. So the next step that couples with bringing Chinese companies home is to bring global capital home, particularly Wall Street capital. And that's exactly what Wall Street is trying to capitalize now. I believe the UK asset management companies, pension insurance companies are behind. And this is definitely an area that China is making a wide open opportunity now by allowing wholly owned financial subsidiaries to operate in China. This would be a very big structural opportunity for financial services companies. ASEAN market is one of the world's most unassuming growth markets. ASEAN economy, if you combine the 10 economies together today, it's bigger than Japan's. But you don't think about it as a major economic force. ASEAN in 2020 became China's largest trading partner. And on top of that, in the first half of 2021, ASEAN's trade with China grew another 23% or so. So it's really growing astronomically. And in the future, what you see imminently is this deep integration of the supply chain between China and ASEAN. So it's going to play closer together. And James was talking about technological integration. That's one of the major push for China's Belt and Road Initiative. It's essentially digital connectivity all across the Asia Pacific and the Eurasian continent. And so in ASEAN, today, if you look at the areas, the countries that are very technologically advanced, so you are looking at some very basic economic parameters there. Young economy, rich, with a lot of young labor force, and they don't have really the full sophistication of the 20th century global financial network. And these economies are growing with a very similar model to where China started its digital economy. And essentially, if you look at Thailand, Malaysia, Singapore, it is Alibaba, Tencent, and all the Chinese companies that are investing in there. Talked about Grab, talked about Lazard, and all these ASEAN digital economy names, they are essentially invested by Chinese big names. And so there is a very deep level of technological integration. So what that means is that not only the digital connectivity is happening between China and ASEAN, but also Chinese capital is flowing into these regions to capitalize